Okay, so this is part 2, how to trade for a living. So my goal here with these videos in this series I'm doing is after the series is over, that my kids will be able to watch these videos, have a good understanding of what I'm doing and how I do it, and then if something happens to me, that they can take the information in these videos and go on and be able to provide for themselves via trading. So this obviously needs to be somewhere public where it's not going to get taken down, that they could access if something happened to me. And I couldn't think of a better place other than YouTube. So Aiden and Carson and anyone else in my family, these videos are for you. So in the first one, we went through and just touched on candlesticks briefly. We went through and just like understood what a candle is, the high, the low, the close of it, and showed you how there's really two ways to look at candles with moving and stopping. But we didn't really go very deep into it. And I want to keep these videos pretty short and to the point and cover a topic and then move on, right? I don't want them to be too long and too detailed to where you kind of like zone out either. Okay, now we're going to be classifying them by range. So market momentum, large range candles indicate strong market momentum. So by momentum, we just mean like it's moving quickly. So let's check this out. So for example, in this trade that I'm in right now on Bitcoin here, which it doesn't matter what you're trading, candlesticks are pretty universal, right? Now I'm going to choose a 5-minute time frame. So that means each candle is going to be 5 minutes long. So momentum is big range candles. Like these are upward big range candles that have a high impact on the current price action. When we're looking at the candles, what am I looking for? I guess that's what I need to be explaining. So I don't want to be entering when it is in a large candle, right? Because price is likely to retrace at some point, and we don't know when that's going to be. We do know from the phases, though, like we touched on last time, that if you have a big up move, you start seeing these small candlesticks that are dojis where they have large wicks on either side or one side. But the point here is the small body of the candle, right? Those are like anti-momentum. Those are showing weakness or balance between the buyers and sellers. See this? These candles are wide range. They're very large. And now look at my profits. 400% gain. On $100, I'm about to make $500 on this trade here alone. Now I'm going to go ahead and exit because I'm not greedy, but if I was greedy, I'd probably hold on to it. So something you'll notice when you have large ranging candles, that they're showing momentum and their speed in the candles, right? The way they move is quick. It's fast. They do this also to suck people in. So if you see really large range candles that are moving very quickly, your natural reaction is to kind of like jump in there and get in on with it, right? Because you don't want to miss out on it. Something you guys got to realize right now and here and now is the market is unlimited. The opportunities are unlimited. There's no reason to feel quote unquote FOMO is what they call it, fear of missing out. There's no reason to feel that way, because the way I'm going to teach you to trade by the end of this series is going to completely give you unlimited opportunities at any given time. All right, let's go to the 10-minute chart here. So one thing that you'll notice is that when it's in a consolidation, price is pretty lacking of those kind of candles here. So now we're on a 10-minute chart. Every candle's 10 minutes. See how most of these candles in here, they're all kind of like doji-like, right? So it goes up, it goes down, closes in the middle, up, down, closes in the middle. This is showing indecision. Just like up here, after it goes up, then it starts like teetering a little bit, looking like the small candles. That's showing indecision, because price isn't moving, so neither the buyers are aggressively buying neither of the sellers aggressively selling. Everyone's just kind of waiting to see what's about to happen. Now let's look at some live price action here, and I can show you what some candles mean in terms of bullishness and bearishness. So one of my favorite time frames to trade on is the 3 minute, just because not that many people trade on it. Unless if you're doing something that's different from everyone else, trading is like the best example of it being good for you. So you see this candle, right? So this is what we'd be calling a bullish engulfing candle. Why is that called engulfing? Because it's engulfing the previous candle. So it's taking out the previous candle's high. It's closed on its low. The wick is very small on the top and the bottom. So it means it closed relatively at the top, close to the top. And then you'll see here is before the candle, before the reversal happens, you'll usually get one of these really wide range candles that show momentum and strength. And then once you start seeing the doji, the small range candle, that price is probably likely to reverse. So you get a small reversal there. It's not really what I would consider reversal. We'll get into market structure in a couple of videos down the road. So now let's drop down and look at a 30-second chart because there's lots of candles, lots of price to read. So you see how here you had two bullish engulfing candles up, and then you had started getting dojis. So I keep saying this because I want you to see that this means that it's about to reverse a little bit. It doesn't mean like it's going to reverse all the way back down, but you're going to get a reversal of some kind, like a push down. When we are reading candlesticks, you really want to be grouping them together in like sets of 3 or 4, because the candlesticks work in a relatively consistent manner. What you'll often see is that they'll start what I call one time framing, which is like, let's say this is a candle here. Next one opens up, it goes above the previous candle. The next one opens up, it goes above the previous candle. Next one opens up and it goes above the previous candle. And this can continue for 5, 6, 10. I counted up to 34 candles in a row on the pretty low time frame of 3 minute. So if you start seeing candles in a row, it's a good indication of the strength in one direction or another, especially on a time frame that's about a 3 minute or higher. You'll notice here that you don't see any down candles in a row, right? Maybe 2.5, but you don't see more than 2. But what you do see is a lot of up candles that aren't taking out the previous candle's low. So that means that this candle opened up, this one went higher, retraced back down, but it didn't touch the low. This candle opened up, didn't take out that candle's low. This candle opened up, went higher, but didn't take out this candle's low. So when you start seeing that, it's a sign of the strength of the buyers here, because as soon as this candle opens down, pushes down, the buyers think it's an opportunity, so they buy, push it up. This candle opens up, buyers think it's opportunity, so they buy, and this continues all the way. We saw it took out there, it does it just for a second, but then it continues up. You see this whole trend here. Did it take out the previous candle's low? No. Did it? No. Yep. Popped right back above it. Nope. Nope. Popped right back above it. Nope. 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 That one did. So that would be like a warning shot there. There's another warning shot. So you can see here by reading the candles in the row that you're starting to see weakness form here, winning in comparison to the price action earlier. All right. So let's get into special candlestick patterns. So we have bullish patterns such as hammer signal potential upward reversals after a downtrend. Bearish patterns, same thing. So pattern recognition. So what that little thing was just referring to is when a reversal is about to happen, you'll get a specific kind of candle that repeats over and over again. So if we look here, let's look at some reversals here. Let's go to a 10-minute chart. So you see this here, this candle here is what they refer to as a shooting star. It has a large wick on the top, and it's a down like a black candle or down red candle. It has a large wick on the top. So this shows that buyers pushed it up and then sellers pushed it back down, closing here. And then you followed by a sharp reversal down. And this one here is just a doji, right? So buyers push it up, sellers push it down, close right in the middle. Signals the reversal. This especially happens on lower time frames. It is incredibly accurate. By higher time frames, I mean like the charts that are on the day time frame, like the daily. Let's look at that. So if you look here on the daily chart, almost every single reversal, each candle is a day. Every single time it stops moving up and reverses, you have a doji candle. Doji candle, doji candle, doji, big doji candles. So every single time, doji candle. So I refer to any candle that has more wick than body as a doji candle. I don't refer to them as every single name. That would be exhausting to go through here and like memorize every single name. If it doesn't have a normal size body compared to the length of the candle, I would say if it's over half wick, then I'll just refer to it as a doji. So if you're trading and you see price just got done moving up really aggressively and it starts putting a doji in, and then once it takes out that previous candle's low, you need to get out of the trade, and you can re-enter if you have to, but you need to exit. So beautiful move there on Bitcoin, 300% gain on the trade tonight. All I did was wait to see price moved up. It put in a couple dojis, and I waited to see this green candle start pushing up here above that doji's high, showing me that this was a reversal here. Go the 1 minute, it's even clearer. So I saw this. So I'll come down, and once it's put in the second green candle in a row here, I pulled the trigger, risking relatively not that much. So if you look at price here, you had all these candles in a row, and this candle is taking out that candle's low. So we're going to wait for it to close here. It's got about 30 seconds. If it closes below that hammer looking candle there, looks like a hammer, like this is the handle, that's the head of it, right? So if it closes below here, then I'll get out, because that signals a reversal, because it's showing that the buyers are weakening here. Like they bought aggressively, and you had a little bit of weakness there. We have 1, 2, 3, 4, 5 candles, 6, 7, 8, 9 candles in a row up. 10 now. 10 candles in a row. So you see how it gapped right there? That's extremely aggressive bullish price action. But I think it's going to have to come back down there and fill that. So I'm going to go ahead and exit. Take my $500 gain there. 360 or so. Not too bad. So you see how it told us the story of the bullishness before this even happened. There it continues upward. But at some point it's going to have to fill that in. It's really important you start noticing the candles in a row, because later on this is going to tie into my half back to balance strategy, my framework for price delivery with the algorithms. So it's very important you start learning and analyzing and looking at the charts. The goal here is to spend as much time as you guys can in the charts studying how price moves. Yes, I can teach you and I can fast track your experience by some, but it really just takes a lot of time in the charts, analyzing, looking at it, trying to understand what's happening day to day, minute to minute, hour to hour. And if you do that long enough, you start to develop an intuition for what's likely to happen. And it just comes with time, right? I can show you the framework, I can lead you to what to look at, what not to look at. But overall, it's going to take your time in the charts, understanding how price moves. So if you look at this chart here and you analyze the previous price action, you really look at it, you can see the story being told. Really aggressive up movements, about the same length of the up movements, right? All candles in a row, and then another big move, all candles in a row, and then we have a little slightly bigger pullback than the last three, right? So very small, bigger, bigger, and then after this big one, you have a little pull up, and then it stops and stalls right there, and then kind of get one last push. But the story is it's getting weaker. The moves are less and less and less. So I assume it's probably going to reverse right here down again. show some more weakness, or it's going to do a blast off kind of like top here. So I hope it's the latter. So you see that here, how it's getting weaker as it's going up. The candlesticks are speaking to you. They're saying, hey, Bitcoin's probably going to reverse here soon. It's only a matter of time. Bitcoin's tiring out. You went from, let's count how many candles in a row here. 1, 2, 3, 4, 5, 6. 7 candles in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then 3 in a row, pull back. 1, 2, 3. So here's that reversal. See that? Great example of how reading the price action and just looking and analyzing it in a rational manner can lead you to a understanding that most people aren't just going to get to because they're overcomplicating this. It's really not as difficult as most people make it seem. Just simply like study it and say, hey, okay, well, yeah, that very bullish, small pullback, 3 candles, very bullish, a little bit larger pullback, but still 3 candles, push up, push up, push up, and then you have a 3 candle push up, failure swing. So this is the first time that we've seen a lower high break a higher low. So that higher low got broken, put in a higher low, followed by breaking that. That is immense in terms of information, but we're not going to get into market structure. We'll do that in the next video, most likely. We'll also be getting into everything that you're going to need to know, guys, to be able to start trading. So remember, this is just the beginning. Don't skip videos, because even if you are more advanced, I'm probably going to cover some things that I just have never talked about before, some nuances to the basics of trading that I just haven't talked about before, because I haven't really made any content for beginners before, but doesn't mean it won't be extremely valuable to you, because just because I'm teaching more of an intermediate term, more advanced kind of style of trading doesn't mean that these special nuances that I'm kind of like blessed to be able to see and kind of like break down. There's some in the beginning stages too that I imagine will be very valuable to you. So I wouldn't miss out on them if I was you guys. I'd still watch the videos. It can't hurt to learn something new, right? Even if you have studied it with another person, learn from a different creator, that's cool. But I kind of have a unique way of looking at things, right? So I think it'd be important for you guys to learn it. So I will see you guys in the next video. I'm gonna wrap this up here. Keep these videos nice and short and to the point.